All in business, Iranian strikes on Gulf states the last 2 weeks denting reputations in the region as safe havens for investment. But some say that impact could be short-lived. At the Milken Institute Global Investors Symposium, participants discussed how capital flows might evolve as a result of this conflict and how Asia might actually benefit.
3 weeks in, the war on Iran continues to send shockwaves through the global economy. No surprise then that the Middle East conflict dominated discussions at this year's Milken Symposium in Hong Kong. One view is that this is yet another disruption in a constantly changing world.
What you are seeing is that the geopolitics, for example, what we have over the last 2 years, we started off with export control, and then we have FDI screening, and then we have tariffs escalation, with country origin rules, and so on and so forth. So in that context, if you take the Iranian conflict in the Middle East, for example, that is simply another disruption layering on top of that series of disruptions. So we are now witnessing is really in the age of recurring disruption, and businesses, of course, will have to react to that.
Already the war has led to some money moving out of the Gulf, which was seen as a safe haven. Hong Kong's leaders have said that the Chinese territory might benefit from some of these capital flows. But one economist notes that the Gulf countries are taking steps to ensure that what is now a transitory disruption doesn't become a structural one. For example, by still providing tax benefits.
I think that one of the most important items is the fundamentals and the policy anchors in countries. The fundamentals and the policy have not changed. This is a shock, an exogenous shock. So investor confidence is always affected when governments change their course with respect to policy. But this is not what is happening today. This is an exogenous shock. It is forcing a certain reaction. Capital flows always move through cycles. And even if this is going to be for some time, we believe that the bottom line fundamentals in the region are strong and should continue to be attractive for investors.
In the longer run, analysts say that the story might be one of increasing bets on energy security and defense. But investors may also work to diversify away from the US, with a growing view that the country is becoming less reliable.
I think the bigger picture, again, after this oil spike generated rally in the dollars, when this settles, whenever that may be, you're going to see the resumption of capital flowing away, on the margin, flowing away from the US towards Europe, towards Asia. So I think for sure Asia is going to be a beneficiary of this. And this isn't a sell US, buy everything else. It's more, you don't have to invest as much in the US, you just need to invest more elsewhere from a diversification and risk management perspective.
And there's no shortage of risk in the markets, leading to some long days for investors. The consensus seems to be that the war on Iran will escalate before it de-escalates. And so, age-old advice seems to hold. Be proactive, not reactive. Look for opportunities, but maintain a long-term perspective in the face of volatility. Jeraldine Yap, CNA, Hong Kong.